Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. This year, 2026, we're sharing 26 client profiles. These are not hypothetical examples. These are real people, real policies, real premiums, real health histories. I'll explain why I recommended one policy over another and how each decision was made. Question I hear all the time is, what if I apply for long-term care insurance but get declined? Well, in this episode and the next, we're going to talk about clients of mine who in the past year have applied for long-term care insurance and been declined. And I'll explain how we handled each situation. First situation, we have a 48-year-old married male. We'll call him Kenny. Kenny's an entrepreneur. He's comfortable financially, and he wanted to purchase long-term care insurance because his relatives have needed care, and they had long-term care insurance, and it worked. He wanted to get a policy at a younger age because he's comfortable financially. He can comfortably afford the premium and still meet all of his other financial goals. Also, he could deduct some of the premium off of his income since he's self-employed, and he wanted to get a lower premium than if he'd waited until he got older. And the younger you are when you apply, the lower the premium. So he got in touch with an agent who recommended one of the top long-term care insurance companies for him, and he applied for it. And he was denied because he'd had a small skin cancer on his face a few months prior, and the company said they would not insure him now. They would possibly reconsider an application in a couple of years. That underwriter was obviously concerned that the cancer might come back. Now, to Kenny's credit, he didn't give up. He did a search on his computer, and he found my website, and he requested I give him a call. After our initial conversation, I reviewed the underwriting guidelines for each of the top long-term care insurance companies. And for his particular kind of skin cancer, most companies were requiring that he not apply until he was cancer-free for 2 years or 3 years. Some of them even wanted to wait 5 years before they would consider insuring him. Fortunately, I found 2 companies that said they could insure him now. So we filled out an application for the company that offered the best rates, and after they reviewed his medical records, they approved his application. It took several weeks to get the records. He did not get the preferred rates, but he was approved with the standard rates, which, again, that was kind of expected, having had the history of cancer. But here's the good thing. The company that approved his policy, the premium was about 27% less than the company that had denied him. And the company that approved him had richer benefits in their policy than the company that had denied him. He was approved for a policy with a starting policy limit of $480,000, which was guaranteed to grow, which is guaranteed to grow to over $1.2 million of benefits by age 80. His monthly benefit starts at $5,000, and it's guaranteed to grow to $12,875 by age 80. And the benefits will continue to grow each year for as long as he lives by that 3% compounded growth. And the way his policy works is that the growth in the benefits each year does not make the premium go up each year. That growth is already built into the premium from the start. Plus, his policy is regulated and protected by the rate stability regulation in his state. His annual premium for these benefits is a little under $2,600 per year. The lesson here is that just because one insurance company says no, it does not mean that every insurance company would say no. There's a lot of nuance to long-term care underwriting, and sometimes it takes a little bit of work, a little bit of legwork, to find the right company with the right policy. For me, part of my job is to make sure that the underwriters get the information they need in order to make the right decision for you. Thanks.